Hello.
Hello. Good day, all.
Yeah.
Hi guys, welcome to our class today. So, can each of you have a short introduction about your business and what are you currently doing for 1 minute, please? So, I'm gonna call out each of the project names in our list. So the first one is Nudix.
Hey everyone, I'm Artem from Nulix. Nulix is a Web3 distribution and funding platform for games with no content restrictions, combining digital storefront, milestone-based financing, and crypto-native payments. Thank you.
Yeah, thank you. Next is XY. Anyone? The next, predict our market. Next, Hatchiverse.
Hey guys, I'm Sol from Hatchiverse. Hatchiverse, we are a decentralized IP. We're a collective of indie devs building a Pokemon / Dungeons and Dragons IP. We are currently 50 builders working across 8 projects and full Web3 economy on a mobile game coming out soon. Thank you.
Thank you. Next, BitDance.
Hi, thank you for having me. BitDance is a decentralized physical infrastructure network and is committed to building an open-data infra for personalized AI agents with privacy preserving by leveraging trust execution environments, zero-knowledge proof, and smart contracts. It can be widely used in the fields of healthcare, finance, education, etc. That's all. Thank you very much.
Thank you. Next, Token Health. Next, Bogowi. Okay, next, Oriel. And next, Suster Lattice Network.
Yes, hello, my name is Sebastian from Schuster, which is a next-generation centralized storage network that is able to handle mutable and immutable data. It's also able to run databases directly from the decentralized infrastructure, and it can also run vector databases unlike other competitors. Thank you.
Yeah, thank you. Next is Kubane.
Hi everyone. So we are building a Cubane which is a layer 1, and we are bringing up privacy on-chain as well as relational database and solving a problem for institutionals and the enterprises. So yeah, that's what we are building here.
Thank you. Next, Portal Protocol. Next, Polycruise.
Hello. Hi everyone. Mitesh here from Polycruise. Polycruise is an all-in-one AI-powered no-code platform that eliminates Web3 complexity. We enable creators and businesses to build, launch, and scale effortlessly in Web3, from NFT to DeFi in minutes, getting you from idea to development in under 48 hours. And we have more than 36 plus partners and 7 to 10 clients, they are looking to integrate with the Polyquiz infrastructure. And currently, we have more than 5+ previous storefront that's live. And very soon, we are launching Polyquiz AI Studio. Thank you.
Thank you. Next, Global Patch. Next, Legend of Hearts.
This is a handful Legend of Hearts. Legend of Hearts is a Web3 action adventure game, like a family-friendly action adventure game, where players can explore, convert emotions, defeat evil and treasure as well, and send NFT gifts to the person that they care about through social media, utilizing our account abstraction technology. Recently we have reached a decent milestone. We have around 18,000 subscribers for our upcoming prototype. Thank you very much.
Thank you. Next is QSTN. Okay, next, Fakecraft, Mortal Labs. Next, I guess Finance.
Hi guys, I'm Wing from Incubation Finance. So what we do is that we tokenize stocks so that investor can get liquidity and spend with Visa cards and at the same time can earn yield. So all of this without selling their assets. So it's pretty much like converting your stock portfolio into a liquid account where you can use it anytime that you want, while it continues to generate yield. So if you think that in some way, we can collaborate in any area, feel free to reach out to me. Thank you guys.
Thank you. Next is Yamata.
Hi guys. Yamada is the DeFi super app that brings centralized grade performance to all markets on chain. We're kind of like a universal trading infrastructure without the trade-offs that have traditionally been a problem in DeFi. We have spot, perps, order book spot, perps, prediction markets, options, and vaults. And all of these in one place, so it's no more choosing between. It's not just no more choosing between fast and safe. It's also no longer having to choose between using perps on chain and going back to a centralized vendor hedge. Everything all on chain, all in one place, all at centralized speed. That is Yamada.
Yeah, thank you. So in order for to make sure I'm not miss anyone, I will read again the list for who have not attended in this list yet. So first one, XWise. Next, Predict Our Market.
Prediction market is what you are. Predictor market is what you are telling.
Oh,
Hello.
thank you. Can you make a brief introduction about your business?
Yeah. So we are building a user-generated prediction market on Bitcoin ecosystem, which is powered by AI Oracle, which we are building in-house.
Thank you. And next, Token Tells. Bogowi. Oracle. Potha Protocol. Yeah, and that's it. Thank you. So our topic today is about VC insights. So what makes a Web3 startup investable, and how to identify common red flags, and how VCs assess teams and execution. Today we got two speakers. Is Tiffany Chang from Gate and Clement Chan from IBC.
So let me handle the introduction here from us. I think you missed some of our speaker already. So today we're going to be like a panel discussion, so it should be less no class, more casual than usual. So let me introduce some of our, let's say, panelists for today. First of all, we got Tiffany from Gate Ventures. So Tiffany, would you please turn on your camera, maybe your mic, introduce a bit about yourself and also what you do in Gate Venture?
Thank you, Eric, for that brief introduction. So, hello, everyone. This is Tiffany from Gate Ventures. As you can tell from the name, we are an exchange-backed VC. We are backed by Gate Exchange, as some of you might have used before. Being an exchange-backed VC, we do have a great access to a wide range of investments, including strategic investments, including venture investments, including secondary investments. So I think with the questions that I got for this panel, I think there are some questions which I definitely have some insights because of the wide range of investments that we are looking at. And at Gate Ventures, I do investments, I do post-investment management, and I also do partnerships. So I heard some of you mention about the sectors that you're working in, and some of these lie in with our focus right now. So happy to share more insights with all of you later on about what we're looking at, about what we're looking for right now. And thank you, Eric. And I believe the next one is Clement. I also know Clement for a long while. Like I think we got into the industry around the same time, and we've been having a lot of mutual friends. So it's always good to see another old friend here.
Okay, then Clement, you're next.
Yeah, for sure. I think I did some introductions within the last couple of sessions, but today I think might as well just give you guys like a more detailed version of that. So I'm from IBC, I'm Clement Chen, and I'm involved with the investment here at IBC. But to put it simply, we're a Web3 VC coming out from Japan. So we started out doing a VC and startup event called Infinity Venture Summit, IVS, for the better part of about 17, 18 years from now, every year in Japan. And about 10 years ago, we started to do the VC side of the business as well. But that one was originally investing into more on the Web2 side of things, SaaS, web-based solutions, something like that. But around the time of 2021, we actually started to see a lot more Web3 crypto deals coming in, token deals all together. So that's why we decided to do the Web3 side of the VC as well. But due to some restrictions on the LP agreement, we need to use a different name for the VC for Web3. So that's why there are a lot of names for us. So we still do the event every year. IBS Crypto, and we have two funds. One is Headline Asia, more on the equity Web2 side of investments, and we have IBC, where I'm working from, mostly on the Web3 and token side of investments. But as far as IBC goes, we invested into about 200 projects for now. About 40% of that is in the GameFi ecosystem. The reason is just that one of our first ever deal was YGG back in the day, so we got a lot of resources and network into the scene. And also we have a lot of Japanese game studios as our LPs. So names like Sega, Bandai Namco, Akazuki, Gumi Crypto, there are some of our investors into the fund too. But with that being said, we're still very actively investing into a little bit of everything in Web3. So just an example, we're one of the first investors into Aether, the GPU DP network, CARV, CARV, the DID project, XAI, Zai, Arbitrum Layer 3, more recent ones like Open Eden, Gaib, Zeus Network, something like that. So we do a little bit of everything in Web3. We even invested into a couple of pure AI deals in equity, also a K-pop agency with the Web3 angle to it as well. So we do a little bit of everything in Web3, but when it comes to our strength, our forte, it will mostly come from the Asia side of the resources, especially in Japan.
Cool, thank you very much, Clement. So the next one, I would like to invite Leroy from Galaxy.
Hi, yeah, nice to meet everyone. So yeah, this is Leroy from Galaxy. So Galaxy is basically like an all-around like crypto kind of like investment bank type of firm. So we have been in this industry since 2018. So we cover like a broad spectrum of what's kind of like happening within like the crypto side. So like we have like on the prop trading side, so we are very active on that. On the venture side, we are like block trading. We are very big into risk, lending, borrowing as well, and we also run like infrastructure, like so we are one of like the largest validators on Solana, for example. Like keen to learn from you to learn what you guys do on your side.
Thank you very much, Ryan. So I think the last one we got in the panels for today is Sebastian from Aquana. Are you here, Sebastian?
Indeed, yeah. Hi, everyone. Seems like a really good panel. Happy to be part of it. I work for the investment arm of Aqua where we help traditional financial service businesses enable crypto on their platforms. So, for example, if one of the bigger banks in the UAE is called Emirates MBD, right now you can create crypto on their digital app, and we help them do that kind of from like conceptualization to some tech infrastructure and also trading. We just signed an agreement with like Visa to help stablecoin payments, stablecoin money movement in various regions of the world. And so that's the main business. On the investment side, we have two funds. One is early stage venture, where we're focused on projects building kind of like data platforms, like analytics, that kind of stuff like that. Generally, actually, I'll just summarize it this way: we're building for people who are kind of we're investing in companies that are building for a world where traditional like architecture interacts with like crypto and blockchains, and so not necessarily like we're not investing in like infra like L1s and L2s, but it's like if you're building dev tools, SaaS, middleware, that kind of stuff to make it easier for people to interact with digital assets, then that's an area that we're focused on, and then compliance, that kind of stuff. So a lot of the boring things that most people are like, this is not very exciting, but for us, that's the vision that we're building towards. That said, I'm fascinated about the space very more broadly as well. I mentioned we have two funds. The other fund that we run is a lending fund. Actually, just not too dissimilar to some of the activity that the Galaxy does. But so let's say, for example, you've got digital assets on your balance sheet and you'd like to borrow stable coins against those, then we were happy to do that trade all day. Aqua now runs a 24/7 trading desk, so it's pretty easy for us to manage risk on that. And so that's kind of an area where I spend a lot of my time as well as managing that book and trying to grow the business there. So really happy to be here. I guess for what it's worth, like my background is more like in traditional finance before this, working in like hedge funds and selling equity derivatives, and so that's kind of the lens that I bring when I look at the world. But super happy to be here. Thanks for the invite.
Okay, cool. So let's dive into the today's topic. So that will be panel question, right? So I think we will have the question for the panelists to answer within the next 45 minutes. And then the last like 30 minutes, I left you guys at the folder trying to talk to our friend Alpha here, Dr. Clement, Dr. Chang, Dr. Sebastian, Dr. Leroy about what they're doing in their firm and how their work is actually relevant to you guys. So let's dive into the very first question I got into the agenda. I think the most important question is like for all the founders startup out here is like for your personal point of view, especially when you do the scorecard to evaluate the project in general. So what the key quality or element that you're looking for in let's say entrepreneur in general? So probably I'm going to probably lady first, Tiffany.
Yeah, so I think as Gate Ventures, we invest in both venture deals, we invest in both late stage deals, strategic deals. For us, we view early stage and late stage investments very differently. I believe a lot of other fellows here feel the same as well. For most VCs, they will have a combination of like 60% in early stage deals or 40% in late stage deals, or the proportion would be different. But the main idea here is most funds try to pair these two to structure a more balanced portfolio to diversify their risks. And when it comes to investing in early stage deals, it comes down to whether the founder is competent. Because for early stage deals, it's really hard to see whether the idea has a real product market fit. There is no fact, right? There is no proof. So it usually comes down to the background of the founder, and if the founder is competent enough, even if the idea doesn't work, we can always pivot to another idea. So when it comes to early stage investments, I always make sure the founder is someone that moves fast and willing to develop himself into this project or this company. I try not to invest in founders that is doing a lot of advisory on the side, or founder that has a lot of legacy projects that need to maintain. This is my personal point of view, but I do know there are some funds that really like founders that is always somewhat a bit around here, a bit around there. But I prefer founders who are very focused on this project. And then another thing that I personally think is very important is the founder needs to have the willingness to succeed. I tend to not invest in founders who already can retire, because they don't really need to really make this project work. Once we invest in this project, we're already on the same boat. So we both want, I hope we both want to make sure it succeeds. So I like to invest in founders who has had some experiences in the space, but still need to make sure this one succeeds so that he can retire. As for the makes whether your attraction question of days can be right. The tokens look at revenue. If you have revenue, in some way, you will always make sure you have the money to buy back your token. So you always make sure you have the revenue, have the cash flow to support your actual. There is not a token. If it's an equity deal, then it comes down to a very rational financial decision whether your attraction is making sense, whether we are seeing a lot of future in your company. So that's how I view things very early stage and late stage venture capital. OTC after the TBE. So at this point, it comes down to it doesn't really come down tokens, right? Who are they, right? And what a possibility for us to see a value in the token in the future. So actually in this market, we have done very few OTC deals because we find them hard to make money.
Cool, thank you a lot, Tiffany. So like founder focus, right? The one who focus 100% on the project, and also the token value, and the project need to generate revenue in general. So do you want to add in any further insight or aspect, probably later on?
Yeah, I think actually like the thoughts are quite similar. So I think like for early stage founders, like when they're trying to find kind of like product market fit for like their product, I think like it's also kind of like important. Like the founder also has grit as well, because obviously like crypto as an industry has always been changing quite rapidly. So then like ultimately like what the founder initially thought like his project should kind of like look like end up like looking something like different, but then like it ended up like fitting like what the market is at that point in time, and then slowly you kind of like grow into that PMF. So then what I feel is that like that's why generally founders need to actually have a lot of grit to kind of like get through that phase. And also like like crypto is also like becoming like harder these days, unlike like the 2017 like ICO era or even like 2021, where it's easy to kind of like fundraise. So nowadays like it's a lot more difficult to kind of like fundraise. So then essentially like you need to show like either like very good product or very strong caliber like in the founder, which is something that we find that is very important. Then I think like at the same time, I think what has kind of like changed over like the past 1 or 2 years is also that like last time a lot of things were kind of like built to kind of like address what is kind of like within like crypto. I think like nowadays like we do see a lot of things that are kind of like trending towards like combining like traditional finance as well as crypto. So then like the harmony of kind of like those two is kind of like what would kind of like succeed within like the current market like architecture. Yeah, is what I'll say.
Okay. So let's move to a little bit like different venture firm. Sebastian, so have you agree with all Tiffany or maybe I currently mentioned?
Yeah, like generally speaking, for sure. I don't think I have any hot takes to be like, oh no, like this is I push back on any of what they're saying at all. I think conceptually, if you step back, right, like if you're investing in we do like pre-seed seed, right, investments like early stage, and so if you think about it, I know people in crypto often think you can spin up a company and go from founding to exit in like a very short period of time, but that's generally not how things work. Usually it's you're building something for several years, and so your pre-seed and seed investors are going to be working alongside you and be partners of yours for that whole journey, right? And hopefully they're trusted advisors. So I think as founders, you want to be careful about who you like. I know at the beginning you're just like, I need to get this thing going, so I'll take any money I can. But like, you kind of want to be thoughtful about who you bring in, because you're going to be working with these people for a long period of time. And I think the other side of that is that you should build time to or spend the time to build some relationships with those early stage investors. So I find a lot of times something that is can be a bit frustrating is when you're having conversations with founders. I get it, trust me. Like when I was kind of a startup in its own regard, obviously it's quite a bit further along now. But like I've seen companies when they're building and how fast they have to go. So I'm not trying to be ignorant to that fact. But like so when you're building, I get it. You want to go fast. You want to get your fundraising done so you can keep going. However, I don't know that I do find a lot of like early stage folks rush that relationship building process, and for us it's kind of it's off-putting, because it's like, wait a minute, like it just seems like very short-term nature for the founders to be acting in this manner, and like that. Probably, if they're doing that with the fundraising, which is actually a very important part of building a business, maybe not as important as shipping code and stuff like that, but nevertheless a critical juncture. So if you're doing like that while at this instance, like while you're trying to early stages of your company, you're kind of setting a foundation for rushing things, and I think that's problematic. I think that leads to eventual problems down the road, blow-ups and zeros in the venture portfolio. Let's call that. So I think take the time when you're early stage founder building and trying to do some fundraise, work with the investors, right? Like if people have a research process that they want to go through, I get it. It's like maybe that's a bit of a distraction for your day to day, but like work with them, let them understand, because it's like they're like everyone here's emphasized founder. It's like you're betting on a person, not just an idea or whatever else, right? So that kind of decision making doesn't happen right away, right? This isn't like speed dating or whatever else. This is setting a foundation for a business to be built over a course of several years. And so like that process of building trust, getting to know each other, and underwriting an individual or a project takes time. So try not to rush that. Build trust, and be mindful of who you bring onto your cap table at those early stages.
Mm-hmm. Glenn, any final thoughts on that topic?
I totally agree with what was discussed, but if I may just add on anything, I would say that, I'm also curious about how the founders tell their story, right? How do they identify the problem solution set? How confident are they on the set, and on their confidence of carrying the set out? And also, are the founders able to take shots against their products? I think it's one of the more important things. It might be a surprise, but I have multiple experiences where the founders were they're basically saying that if you're not investing, it's fine. I will find another VC who care more, won't waste my time. Happens a lot actually. But just to build on top of the team background that was discussed. I would say that one of the more underrated thing is a clean communication. You don't necessarily need to be like Apple level, highly engineered product announcements or anything, but you need to be able to communicate in a very understandable and comfortable way. This might seem shallow a little bit, but at the end of the day, your message is important. And it is even more important to get that message across at the first place, right? So I think great founders can explain what they're doing in a way that is crisp, is specific, is consistent, and that quality actually shows up in sales, in hiring, in fundraising, and partnerships. So I would say it's also an important part for us to see as well.
Okay. So let's move to the second question. So the second question here I got is like they're asking for I think honest father here got a class about like how VC actually evaluate the project in general, right? And we learned about a scorecard based on different aspects. How you evaluate the project for differently. So for your guy specifically, so when you actually make the investment decision, so what is the most important criteria or factor that you consider when you actually make that decision? If may I ask also like for your, let's say, firm specifically, how is the investment process look like? Are you going to have the let's say investment committee IC who everyone vote to invest the project, or like how the decision have been made in general? So maybe go to you, Clement, to the first one.
Yeah, for sure. I think you're talking about like the criteria and also the process, right? The process is more easier to explain, but it also varies a lot according to the different VCs and investors. But for us, we would take the first call for the investment team, get back with the investment team to discuss whether or not we want to carry on with the investment opportunities, and we will invite another partners to join the call before we enter IC. This process is typically much shorter than what the Web2 VCs are looking at. But this is a side note. I also foresee that the process for VCs is going to be taking a little bit longer in the future as well. But that's beside the point. In terms of the criteria, also this is very different from firm to firm. But for us, overall, is that if we can
come up with a strong narrative to support the investment. And to construct this thesis, there's a couple of things that we are evaluating. So the questions are not limited to this, but these are the ones that are more consistently showing up in my mind. So first of all, is the market real and big enough? And does the target audience make sense? Then why now? Right? I want to see a timing reason. Is there a platform shift? Is there a regulatory change or new distribution channels that makes this opportunity newly possible, different than before? And also, how defensible is the business? For earlier stages projects, why are you the one to do this? And why wouldn't the other, like the corporates with much bigger resources to do this themselves? For later stages, do you have a structural advantage? It can be things like data, workflows, switching costs. It can be things, or regulatory mode, depending on the business, of course. And then, is there a repeatable distribution to the business? And I think this is where a lot of Web3 business fall short. If the distribution strategy is through like airdrop, this is the least repeatable strategy. It is going to be a tough time acquiring users. And then, do I trust the team's executions? Is there a matrix to support this? And is there word of mouth or reference that I can take in from the customers or from other investors too? And finally, of course, what is the deal pricing versus the risk that we're taking on? And whether the round size actually matches the milestones as well. Sometimes a great company can still be a poor investment if the terms eliminate the upside or create some sort of misalignment on the investments as well.
Okay. So, how about you? How about Acquire Now process and requirement? Sebastian?
Yeah, Clement really hit it out of the park on that one. That's very much aligned with our kind of process as well. So different people are out kind of doing different things, right? Like as I said, we're not going now. There's different hats, so you're out in the ecosystem doing your various stuff, and it's like, oh, you meet a founder or someone's like, hey, I think you should meet this person. They're pretty awesome. Like, okay, cool. Quick assessment of like the opportunity set, like I think everyone here knows, like in venture, your portfolio tends to be comprised of like projects that didn't make it, and then ones that have like very very high returns, and so everything kind of has to have the potential for venture to scale returns or something like maybe grow to $1 billion or whatever kind of metric you want to put on it. So that's kind of a very important like litmus test. And then a lot of it comes down to founder, right? Like as Clement said, like how do they communicate the story? Is there a problem that's being solved here, or is this hobbyists trying to build just build something for the sake of trying to make some money or whatever else in a secular trend like blockchain adoption is. And then it's kind of like founder market fit, right? Like, are the people who are trying to solve this problem well equipped to do so? Do they have any kind of unique insights into the frictions that might allow them to build something with a little bit more edge than folks who are maybe read about something or whatever else? And then for us, we have kind of like a bit of a deeper kind of like research kind of component. So we have, every person on the team has to meet the founding the founders. We try to be detailed in our thesis articulation, writing investment memos and all that kind of stuff. And so that can take time. Another thing that can take time actually for us is that because we're distributed, right? Like we've got folks I usually sit in Canada now. I'm in Mexico. Colleagues are sometimes in Canada or Asia, or we have offices in Dubai and stuff like that too. So like sometimes juggling time zones can be a bit tricky. But nevertheless, we do kind of have those individual and then like group meetings. Once we have a thesis that's well articulated, usually this process does take time, and journey and where they actually have arrived at by the time you've gotten you're well into. And not going to deliver on what they're saying, like over-promising, under-delivering. Are they blaming like outside factors for reasons why things weren't delivered on, and that kind of stuff like that? So you kind of get a feel for like, okay, like this person actually is this team is legit. And then at that point, we go to investment committee people. We talk about it. We generally seek unanimity, but it's the kind of thing where like people aren't going to be too entrenched, right? Like if there's a hard no from someone on the team for some reason, then okay, maybe we move on. But otherwise, it's usually kind of thing where if it's like, okay, 3 or 4 people are like pretty into it, then it's like, okay, then the 4th person will kind of come along. But yeah, that's the process. Usually, it's not like we. This is going to take a little bit longer. I think Clement alluded to this. I'll just say it real quickly. There was a period, crypto's coming out of the period now where I think a lot of VCs were like, give me a token, like build something quick, get a token launched because I want to sell it, and then I'm like, play the like I bought at a lower market cap and I'm selling a higher market cap game or whatever else, right? Now, like I think that worked for a bit for some people, but that's not really venture investing, and that's not what we do. And so that force made kind of like compressed timelines, I think, on like how fast people wanted to get to market. But look, as I kind of said in the beginning, this is a long-term relationship that's getting forged here, and so it's like we're going to take our time to do research, to get to know you, and see if like you're the kind of person who delivers on what they said they would. So yeah, that's it.
May I follow up with the question, like for your IC, like for example, for people, are they having equal voting power, or you need to convince like 4 of them, to make a final investment decision?
The reality is that like there's we each have an equal vote. However, like our portfolio manager kind of does like carry a bit more sway. So if he's like I'm a hard no, then of course it's on me to try to convince him to say, hey, no, like this is what we really need to be in. But there are times where it's like if someone's like, no, I don't like it, or like it's weird sometimes, right? Like founders can have really bad impressions in the first time go around or whatever else, and then people anchor to that, and so it's very difficult to try to change someone's mind in that regard. Of course, you try, but then at some point you're gonna have to let it go. So yeah, great call out, Eric. If we can get the PM at Aquanel on your side, then you probably have a good chance of getting through.
Okay. So Leo is out for his important meeting, so we will skip him for this call. Let's go to the final opinion on this question. How about Git Venture, Tiffany? Is it any different compared to IBC or maybe Aquanel?
So I think for every fund, it comes down to one single question. How does this make money for the fund, right? I think it's fairly simple and fairly it's subject to everyone on their point of view on each thesis. But I think there's one thing that that Sebastian kind of mentioned before, which is also a question that cannot be listed in investment committee decks, right? Every time we do an IC, before the IC, our managing partner will ask me a question. Is this founder trustworthy? In Web3, we see a lot of serial entrepreneurs which have multiple projects before. They might not, the past project might have already tanked to 0 or nearly 0, but it always comes down to one question, like, how do you deal with your previous investors? Like, if they are not making money, then did you soft work them, or how did you deal with them, right? And now you're moving on to a second project. How are you going to prevent that from happening? Because I think in Web3, if you go to crypto Twitter enough, if you go scroll through crypto Twitter enough, you will see a lot of stories of soft work. And so for ventures, we are also very afraid of that. And we have passed the period that we need to deploy quickly because there's more money than projects. Now it's in the era where there are more projects than money. So it is important for founders to build that relationship with these investors and also keep them frequently updated so that they know you're someone that moves fast, that keeps delivering. I think this is one of the most important things that founders should do right now, because with this kind of relationship that you're getting with specific founders, you could get strategic support from them. It's also important for founders to pick the right strategic investors for them. It's already not the kind of era which you can just do a lot of marketing, get a lot of people into this, and then you launch your token. It's no longer a play like this. We need to start looking at real cash flow because obviously the liquidity right now is very, very low. And even with interest rate cut, I personally don't see any liquidity going into any tokens other than Bitcoin, Ethereum, or just at least out of the top 5, right? So what we're seeing here is you need to be able to really deliver this business model, which is not token. Your business model cannot be the token. And then to deliver it, it's going to be hard. So you need to make sure you find the right strategic investors. And to have the right strategic investors and really get the support from the strategic investors, you need to build a real relationship with them, a trustworthy relationship with them. This is what I recently figured from one of our recent investments. So now I'm helping the project quite a lot. I'm not an advisor, but kind of almost an advisor here with this project. Eric, you're mute.
Yeah, I need to turn on my camera for that. Sorry, my mic for this one. Okay, so the next question, I believe probably one will be maybe not the last, but about to be the last question before we come to the free flow from the founder side. Okay. Can you share some, let's say, success story or use case that you as a VC, personally or within your fund, invest into a project and you did anything other than just money to support the founder, to support the project to grow successfully? So I would like to go first with Sebastian.
Yeah, so when we started making investments 4 years ago, no one heard of Aqua now, well, maybe still haven't, and no one obviously heard about us in the investment spheres either. And so we took it upon ourselves to try to build relationships with founders, be good listeners, and try to help them where we can. We had the advantage of also building what is now kind of grown into a really successful business. So we had kind of direct insights from building maybe a little bit ahead of the early stage investments that we were making, and so we were able to kind of help a little bit on that side. Maybe we had a little bit of empathy as well, where we understood the difference between helping and getting in someone's way. So, in some instances, the best thing you can do is just, let the builders build. And in others, it's about, helping. So we do always try to, facilitate other, capital introductions, help on whatever we can do, right? I do a lot of the content at Aqua now, so, whether we write about the projects in aligned with some sort of thesis that we're thinking about, we can do that, just general help with marketing. And as I said, right, a big thing that we do is we're always in the ecosystem, operating in various faculties. And so if I hear if I can be an extension of a portfolio company's BD arm, then I'll do that every time, right? So if you're out there chatting with someone, you're like, oh, wait a minute, actually, if you guys are doing that, then maybe you could chat with these guys. This might be synergistic. And so we do a lot of, introductions that way. And when we started to kind of put together a deck for raising for another fund here, we went and kind of asked all the portfolio companies, like, for some testimonials, and pretty much everyone came back and said, like, you guys are the smallest check on our cap table, but you're the most helpful. And like, for us, that's like a really powerful brand and something that we stand behind and want to do, right? So, we check in, not like annoyingly, but we're always, our doors are always open for any founders, and we do kind of try to maintain regular communication just to say, like, hey, what are you thinking? What are you doing, right? Like, we have a team of folks who are either building in the space or investing in the space or lending in the space or whatever it is. And so we have different lenses that we can offer, as well as a good network that we can connect folks across. And so we've done that like numerous times. So it'd be tough for me to say like specific, like, oh, this one company we helped kind of like build out, but like, as Tiffany mentioned, like, we really do kind of see ourselves as advisors, as when you invest at the early stage, and that kind of can, that, oftentimes that means that the ones who are winning in your portfolio, you don't chat as much because they don't need your help, and then the ones that are not doing so great, you're talking to them, daily, throughout the day. Trying to like, help them through difficult times, and so that's the job. It's fun and fascinating, but it can be a bit tricky on that kind of thing. But yeah, we try to put ourselves in the shoes of the builders and help as in any way we can.
Just want to follow on that aspect. So. Is there any moment when you're working with founder, you say, we are talking too much and they are not listening to what we are talking about, and the founder say, it's enough, let me do my own way, I do not care about what you are talking about. Is there any moment that you face off before?
Oh yeah, like, for sure. We're typically kind of equity first investors. Like we're looking for companies or projects that are like building businesses, as others have. I think that's an interesting. Like if we were doing a word map of this call, a lot of business has come up as opposed to like token launches. And yeah, like we had some people who like kind of got lazy in the roadmap. If I'm going to be totally forward about it, or I think fair. And we're like, oh, so yeah, no, we're launching a token. And you're like, what? Where's that coming from? Like I don't understand where like. Who wants to buy it? Like, what's the purpose of this thing? And then it'll, so unfortunately, sometimes you get it wrong, and the founders that you backed aren't great, and they rush to do things like I need to make money or whatever else, and then they sour the long-term prospects of the project that they're building. So that's definitely happened. You get some surprises where it's like, wait, where's that coming from? And then there's been other times where just things were really poorly communicated, where it's like, hey, like I understand you're a really smart young individual who's like building a project that's got some hype behind it, and that's great. But like, you still have to communicate with your investors. Like, like we're not just like we're supposed to be partners, right? And if the view is you gave me the check to build my thing, now get out of my way, like very few people can get away with that, right? I think too many people watch the social network and think that they're the next Zuckerberg, and like that's just not necessarily the case, right? Like, and so I think there is that like. The onus is on the founders to communicate as well, right? Like we will reach out, but at the same time, like I don't want to get in the way. And then on the other side, the more positive side, there have been like some of the more successful projects in our portfolio have been ones where the direction today is different than it was when we first started, but they've pivoted and built, in such a manner that they've kind of found market fit, right? And these are not usually like 180 pivots or whatever else, but like kind of a core idea that's kind of evolved over time, and us kind of letting them off, like letting them do that is important, right? I think. Canadians actually are pretty famous for this. Like they're kind of bad VCs a lot of times because they're very like value focused or like value investor focused. So it's like, hey, you said you were going to do this, by this quarter. Why hasn't it happened or whatever else? And those can be instructive questions, but like, look, building these projects from day one are like timelines shift and things change or whatever else. And so I think like giving people some space to build into where the market is going has proven fruitful for us anyways. So.
Okay, thanks a lot for sharing, Sebastian. So let's go back to Tiffany. So any additional thought on that topic?
So we're very lucky that we have an exchange behind us. So we are able to connect our portfolios with relevant resources they need. And I do agree with Sebastian. Actually, I heard a lot of good things about Aquana before because I happen to know Michael as well. And I think in this cycle, right, it's no longer a financial investment only cycle. For every VCs that survived the past cycles, actually, that survived October 11th, all of them have to be very, very strategic right now. Not just strategic from providing value, but also making sure their portfolios are creating synergies together. I do think Easy Labs is doing a great job on this thing. So for us, we're also trying to be more supportive for our portfolios. Just like what Sebastian said, for now we're also investing more into businesses. We try to find a way to have synergies with them. Luckily, we are in exchange, so we can have a lot of synergies from any angles. But for token-only projects, we also try to make sure they are able to launch on either Gates ecosystem on our wallet side or on a staking product or a product, right? So for us, another thing that we value, right, is that we are very keen on doing post-investment management. Actually, a week ago, I just sent an email to one of our Porco founders because his TG got banned after adding too many people at Dubai and Abu Dhabi. So I just sent him an email and asked for a catch-up and figure, his TG died. So he mentioned to me, I didn't expect any of my investors to come to me for a post-investment call because usually investors, they just invest and they will wait until the day you TG. They wait for your next announcement for TG. They wait for your vestings, right? So for us, we are very keen on post-investment management. And I reached out to this portfolio because after 2 months of investments, we think they should probably try to pivot because the market condition is changing. So for now, I think VCs are very important advisor role here, trying to help them view from a market perspective, because sometimes founders they get too focus on building things. They forgot the market is changing. So it's very important for investors to come into the space and say, this is not working. I know you're building very hard, but we should probably try to pivot. So that's why when it comes to early stage investments, it's very important to find a founder that is willing to adapt to the market and has the momentum to adapt fast. So for this kind of project, I believe Clement has a lot of experiences. I think Carve is a great example for that. In the past, we've done several late-stage investments, so it's been okay. But for early-stage investments, it's always been pivoting.
Clement, you would like to come in and share the experience?
Yeah, definitely. I think Tiffany and Sebastian also talked about how pivot works, right? We also had a couple of investments that were good teams, but didn't find success back then. They started, but pivoted pretty good. And Carve, the one that Tiffany was mentioning, and also Zeus Network were a couple of great examples for this. The founders are quick to adjust to the market. They listen to the investors' feedback pretty well. They find the right narrative to shift to when the market is in demand. for their new pivots and turn out pretty good. But overall, if I may just summarize a little bit, I think what Sebastian and Tiffany were talking about there is, right now the money are being used very defensively, and that turns out there's two results from this. One is that it's really difficult to get investments. That's first of all, but second of all, the VCs are more willing to provide more resources to secure their winning positions, winning investors, right? And for us, we used to try to do more on the product design kind of things, analyzing how to go to market, something like that. But nowadays, we shifted to more helping on the go-to-market, especially in the Japan side, because we have been building a community in Japan for a really long time. So we figured that's the best way to utilize our resources. So the event that I was talking about, Infinity Venture Summit, IBS, it's actually grown into a pretty decent turnout. This year, I believe we had around 13,000 people showing up to the event. And most of the event participants are Japanese people. But also, I think 20% of them were coming from the international side of things as well. But if you tried or if you're planning to go into the Japanese market, I think everyone would agree that it is a very difficult task. Japanese people, they're not too trusting to the foreign companies to sit in lists. So having a local partner and a local channel for you to go to market in Japan is really important. And that's what we are very willing to do. And as I mentioned, we also have a couple of Japanese companies as our LPs. We do have like a regular catch-up call, catch-up with Sega, their head of investment as well. So whenever we see a pretty good project or opportunity, we always bring up to the corporates in Japan as well. So doing business there in Japan, I think we're in the good position to provide the resources and helps there.
Mm-hmm. So for the last one, I would also to add in something like similar for us as well. It will be a tough year for us in general. We did not deploy like as much as last year. I think we deployed only like 1/5 compared to last year. So for what project in general, one of our unique points, like we are getting very close with different ecosystems. Like we used to very close with Solana, with Sui, Aptos, and now it's more expand to L2, like Matic, like Scroll in general. So whenever we working with project, we also try to support not only adding fund from VC, but also to choose the right ecosystem to work with. But that also it's not enough at the moment, right? So that's why now we also working with a lot of let's say traditional finance institutions, local government, education, helping them with the understand what is Web3, helping them with the legal aspect regulation, so that we also can help the project, the founder as well. A lot of them actually working on the B2B side, on the infrastructure side, so we're also helping them to actually make sale while working with the government. For example, like we just working with IOTA, like very old L2, L1 in the market, and we have them to work with the Vietnamese government. They're going to support Vietnamese government on the supply chain aspect, source tracing, the build platform with the Ministry of Commerce in general to put all the data sourcing of the goods and services in Vietnam on chain. That's a big topic. Now I got like this year a lot of conflict between US and China chip war, and a lot of Chinese made in China product import to Vietnam, labeling within Vietnam and export to US. So that's why the Vietnamese government try a lot to prevent such thing happen. That's why there's a lot of solution being sobering around that aspect. In short, so we're not only providing capital, but also knowledge and especially a connection in that aspect. Cool. I think I still got one last question for the all three panelists here, but as I mentioned, this time for the let's say free flow from for the founder side. So any founder who would like to give any question to the panelists for today, feel free to raise your hand, and we will go accordingly. Okay, so first one, Mitesh from Polycruz.
Hello, hi everyone. Mitesh here from Polycruz. My question is like, what the most concern about in this current market that as a VC looking for from the startup perspective? Anything like what do you wish, like what kind of concern you have while you investing in the startup? Anything, any point out?
Okay, so what are concern VC having while invest in a project? Okay, who would like to answer that first?
Yeah, I can go. Concerns. I mean, maybe you're talking about like some red flags or something like that can come up with respect to like early conversations. For us, big one is people being pushy. Like, oh, hey, you like my project? Cool. Well, like, I need your money next week. And you're like, okay, well, you can, no, is the general answer there. So that's one. We do a lot of like deal flow sharing, right? So if I meet someone I like, I'll tell my friends who are also investors. And if I spin up a group there, it's kind of interesting. Sometimes you'll see them like in a different group that I'd set up, and someone will say like, oh, Aquanow is investing, or whatever else. And I'm like, we definitely haven't said that yet, so that's weird that you're telling other people that we're in already. So those kind of like things that kind of point to like maybe borderline aggressive or like outright dishonest, right? Like those are problematic, right? And I think it's a tricky one because like a founder needs to have that grit and like have that kind of like that like a little bit of like pushiness, which I think is important. But it's like if that pushiness treads into like the land of like I'm being dishonest, then that's a hard no, right? Like as I said, we're building early relationships here. It's like it's just a red flag that you're not really looking past, right? Another thing would be like if we reach out to our network and then ask about a founder, like, hey, this person here, blah, 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 seems like you know them, what do you think? If there's inconsistencies with respect to like how we hear about people versus how they're talking about themselves, that's kind of not the best either. There are two sides to different stories, so like, you have to be a bit mindful of that, but at the same time, like, that's like, people are misrepresenting, what they've done in the past or that kind of stuff like that, then that's a problem. And then other red flags. I think Tiffany mentioned this too, but like people who have two jobs, like if you're a founder, that's more than a full-time job. So if you're like, I'm partially building this thing, but I'm also doing this other thing, then we're out. So those would be some glaring red flags for us.
Thank you, Sebastian.
Maybe one more opinion. I think we got a lot of questions in the line, so maybe any question we got opinion from two panelists will be very helpful.
Sure.
So,
maybe I can just add on a little bit here. I think Sebastian was talking about more on the red flags of the founder, and personally, I think VC's concern nowadays also include the valuation as well. In the past, we have been given too much premium on the token liquidity in the past. So right now, if you're talking to the investors, you will find them, their appetite has been, the appetite for high valuation has been slowing down a lot, especially, the retail investors also have the same kind of sentiment in the market right now. So that's something to look into as well.
Okay, cool. The next one, I think is from slightly flavor. Is it from Nudix team?
Yes, I'm from Nudix team, and my question is: we are, I can remind you that we are an adult gaming platform, and we want to better understand our investment stage from the point of VC. We want to launch the platform, but it's not launched yet. but we are quite close to finishing our own adult game, which would be the first game on the platform. And it's also, well, specific in its own right. It's on Unreal Engine 5. It's quite good. But it's completely Web 2, no Web 3. So the idea is this game would be the first game on our future platform. So when we release the game, can we consider it an MVP? Or an MVP in our case is the MVP of a platform. So in other words, are we at pre-seed stage or are we at seed stage after the game is released?
Okay, just want to summarize that. So Nudix is building gaming publishing platform for adult games, let's say non-censorship gaming, but they're also having their own games to publish firstly on that platform. So that's why I have the question. I think Clement already know and give some feedback from it already, so I would love to hear feedback from Tiffany and Sebastian on that aspect. So probably Tiffany first, if you have anything in your mind.
So yeah, I do. As long as it's functionable, I think it's an MVP. And if you like to call it pre-seed or seed, I personally don't think that really matters because it comes down to like. Even if it's the C round, it could be your first round, right? You could have a C round and then you can have a C plus. It's always a naming thing. So it comes down to what do you have on your cap tables, right? If you don't have anyone on your cap tables, then for VCs, we just view it as your first round. And if the valuation makes sense, it makes sense. Yeah. So I don't think you need to worry about that.
Yeah, I'd echo that too. Like, I wouldn't get stuck on the nomenclature of the round or whatever else. Like, whether if you build a unicorn and it's like series, H to get there, who cares? Like, that doesn't really matter. I do think, like, given that you're building at this intersection of adult content and gaming, I think, you probably are aware of this already, but like the investor set there is going to be pretty limited. So I think you should find out who does invest in those in that intersection, and then just be relentless and getting your story in front of them. The other thing that would be really important, way more important than what you call the round or what you call something an MVP or not or whatever else, is just get users. Have people using your game, enjoying it, get feedback, continue to build a better product, and then that section of intersection of investors will find your project appealing, and then that's kind of when you get off to the races. I know it sounds a lot easier, like if I just say it like that, but like that's kind of like who cares what things are called? Get a bunch of people using your product, and the people will money will flow.
Okay, thank you. Yes, the first game would give us revenue, would give us traction, so we would include it all when we'll be pitching before VCs. Thank you.
Cool. Thank you very much, Ricky. Next one, Rai from BitDance.
Hi. Hello, everyone. It's my pleasure to join the conversation. I'm Ray, the founder of BitDance. Actually, BitDance is a Web3 project that integrates hardware and software. We leverage our self-developed RISC-V-based open-source TEE, confidential computing chip, and zero-knowledge proof to enable AI to utilize personal data with privacy preserving, providing users with personalized AI agent services. As we all know, R&D and production of hardware are very time-consuming and expensive, requiring long-term continuous investment. However, the crypto industry is highly cyclical, basically following a 4-year cycle coinciding with Bitcoin halvings. This presents a significant challenge to our project fundraising. My question is, are there any investment institutions in the crypto industry that adhere to a long-term value investing philosophy? If so, how can we fund them effectively? If not, shall we turn to traditional Web2 investment institutions? I would greatly appreciate your advice. Thank you very much.
Cool. Thank you very much. Right. So I'm not sure whether the panelists got the ideas from Rai correctly, but just want let me summarize things. Right. So basically, for BitDance, they're building the infrastructure with the combined with the AI and software in general, but they also build their own hardware. Yeah, and building hardware plus selling hardware is very challenging and it's a little bit outlook for the long run. And so far, very concerned about that, like on the Web3 VC is not that long run enough. The larger focus on like 4-year cycle. Normally in the Web2, you can see investment lasts for 10 years, right? Before actually the investor actually exists. So he asking like, if there any VC out there actually looking for long run, I mean, more than 4 years cycle, let's say. So would love to have a talk from I mean, three of you. I think this one is actually a very valid question for onwards in general.
Yeah, if Sebastian and Clement don't mind, I would like to answer it first. We were in the era that after Bitcoin ETF, after Ethereum ETF, crypto has come to, I won't say massive adoption, but it has come into a lot of people's, it has come into the side of a lot of funds and a lot of people. So we're kind of in the era where Web3 and Web2 is kind of integrating. We're seeing an intersection over here. So when you're doing fundraising, it's not necessarily only about raising it from Web3 VCs or Web2 VCs, right? If you are building your own hardware, then you should also probably consider some semiconductor VCs or VCs that are investing in manufacturing, right? So with that being said, you should probably consider having a balanced cap table between Web2 and Web3, which could also lead to a more favorable strategic value for you guys as well. And on top of that, speaking of long-term value investment, right? Since we have passed the cycle, which we have passed the era in which VCs get a lot of premium from token investment, I think most of the VCs that are surviving and trying to survive another cycle would focus on long-term value investment because it's the only way to make money for VCs nowadays. So if you're asking me, or if you're asking maybe Sebastian or Clement, I think all of us would tell you we focus on long-term value nowadays. Unlike 2021, you could see a 25% token unlock at TGE, right? But right now, like you would see like maybe 12 months cliff and then followed by 24 months to 36 months linear investing, which makes all VCs, which forces all VCs to view projects from a long-term perspective.
Okay, thank you for your answer. Thank you very much.
Clement, Sebastian, want to add anything?
Yeah, sure. I think, totally agree with what Tiffany was talking about. I would assume exchanges also have a more long-term kind of horizon as well with ecosystem building and everything. But just to provide more of an example into what Tiffany was talking about, Web2 plus Web3, we do have two funds. Hell in Asia, there's the more Web2 side of things for us. And even then, for example, they're looking into some of the Web3 plays in Japan right now. So, last week, they're just referring me decentralized stablecoin in Japan that they're looking into. So even some of the Web2 VCs are started to investing into a more traditionally Web3 project. So I think that's a very keen observation, and which is very much happening in the VC space overall.
Actually, this is one time where I do have a spicy one to maybe add this that might not be the most popular. Is like, when you talk about long-term like value investing, right? Like, I think an important realization that people are coming to in crypto, and there's been a lot of debate about this recently on like Twitter and stuff, is like what is like if you're a value investor, right? Like you're looking at like the sum of the discounted cash flows of a business, right? That you as an equity holder have a contractual arrangement to receive. that's well articulated in precedent and law all over the world that like this is kind of like well established. If you're a token investor, what do you get? You have no idea. You don't know. Even if there are plans to say, "Oh, we're going to do some buyback or some rev share or whatever else," we don't know. Because of the way the industry has had to grow, there is no contractual arrangement, right? And so, like if in a traditional business, if things don't go well, the debt holders will assume everything, right? And then equity will have whatever's left after the debt holders are made whole. Well, where does token fit in that cap table, right? Like probably very far on the right, if anywhere, right? And so I think the industry in general is going to is receiving a lesson in like value drivers and what value actually means, right? Because it's not sales, it's not revenue. Like sure, and that's an important part at the very early stage. So I'm not trying to discount that, but no one gets sales. Like as an equity holder, you don't get sales. You get something that's left over after all the expenses. And so I think, of course, you're focused on growing the top line, yes, but then ultimately, what value people get is the residual cash flows. And in token land, that's not the case, right? And a lot of times, like equity holders will do just fine. Token holders get nothing, right? I mean, I don't know, in multiple transactions and stuff like that. So, maybe a little bit of a departure from your original question, Ray, but like I think what value is in digital assets is a very complicated topic. Usually, I believe currently the best place to play that is in equity. Tokens can be interesting, but like they're generally kind of valueless. Unless you look at them as kind of like positions on a prediction market where you're anticipating a future end state of something being worth a lot and an end state where regulations allow for tokens to look a little bit more like equity, which I think we're getting to be very clear. But like, I think it's important to realize that, like, if you look at a token list, equity is where there is some value. If you're into speculation or you believe, in the real options analysis or blah blah blah, whatever else, then I do think like tokens do have a place to play and are worthy of consideration. But just something to think about, I think, as you go out there. And then one maybe a little piece, just because you said you've got some hardware side. We don't invest in hardware because it's tricky, right? It's extra difficult to make changes, pivots, so on and so forth. There's supply chain bottlenecks and all that kind of stuff. So for us, venture investing is already quite risky. So it's like if we're going to make those risky investments, it's going to be in like code bases where things can be changed with relative ease, and there's not like some supply chain bottlenecks that can kind of come into play. I think it's awesome, and I do encourage you to do that. I'm not saying it's a bad thing. I'm just saying for us in our portfolio, like that's an extra level of risk that we're not comfortable with, and so that's kind of where we go. So I think similar to the question before, like, find the investors who are comfortable, who have an expertise in that area, and get in front of them and chat with them.
Cool. I think we need to speed up a bit because we only got like 10 more minutes left and we're still the 3 questions. So next one is Sebastian from Shooter. So what is your question, Sebastian?
Yeah, hello, thank you. My question is specifically on the infrastructure level. What do you guys look for? Not in the sense of hardware, but a network like with nodes and that kind of stuff.
Okay. Would like to answer the question first?
Well, if I may add some, I don't really have a concrete answer. I think a lot of VCs are still looking for a way to evaluate these kind of deals as well. But overall, if you look into what projects in Web3 are making money, it's mostly coming out from the infrastructure side, right? Trading, some of the DeFi projects, and of course layer ones, infrastructure, something like that. But also the end users, the retail users, they're just not supporting that kind of relation anymore. So it's very difficult for us to invest into that kind of project as well. So I would say you need to find a way to build up a narrative that is, but this is very tricky, right? Because in the past, we've been taught how solid you need to make your product to be. But right, telling you that for their one, you need to find a narrative that the investors are willing to invest. So as you can see right now, I'm still not too sure about the standard answer to that. Maybe Sebastian, you can have a better view on this, but I'm not sure.
I mean, I think there have been attempts to value networks like Metcalfe's law, Zipf's law, different things to like say, okay, and like I think conceptually, the more people who are using something, the more valuable it is, and so there's that kind of like proportional relationship there. But and again, I don't want to belabor the point, but like something that I think is tricky is that, okay, so like let's say Ethereum, the network, is worth a whole bunch because there's tons of activity on top of it. Okay, that's awesome. Well, why, like the network itself could be valuable, but why does that, like how does that value drive or flow to the ETH, right? And I think that is a question that people are going to have to ask or think. Like it's interesting because you have Anatoly from Solana. Like I think he's kind of famously said, he's like what is Sol's token worth? I don't know, maybe nothing, right? It's like it's a gas fee for accessing our network. Our network has value, and like having Sol token, some governance, you could just share some, some fees there or whatever else. But like, it's a bit tricky. I think as a question. But I think, if you're in a network game, like users are the users and use cases the top thing, and then you can probably figure out a way to monetize that and then drive value to like some sort of like equity or token or whatever it might be. But I think it's important, and this is very obvious in crypto right now, is that your network effects are the same network effects as anyone else, right? So just because you have the ability to generate more value by having more people use your product, that same thing happens to every other L1 out there. And so it's like, how do you create lock-in? How do you make it so people like need to stay on your platform as opposed to like do their own thing, or be really successful and be like, you know what? I could just internalize a lot of this and do my own chain. And so, I think we're in early days. It's super fascinating. But yeah, it's freaking hard to
Well, just to fix up my answer a little bit, I think rather than talking about narrative, I should talk about niche. Can you find a good enough niche for your infrastructure? Like when you're looking into like Avalanche right now, they're going after the institutional users. Peak, different RWA use cases. So whether or not you can find a real niche to use your infrastructures that is willing to pay, big enough market, something like that.
Cool. So I think we got 3 questions left. So speed up things a bit. I think each panelist will answer one question. The next one from Yamata and Brandon. So.
Hi guys, good panel. Thanks for coming on. My question, I'm just curious about contradictions. And what I mean is, like, we're looking at stuff like the MVB program from Binance, but our core, we have a lot of DeFi stuff going on, but our core product is an order book exchange. And even like Gate Ventures, for instance, would it feel a bit contradictory investing into an exchange when you yourself are an exchange? And the other part of that question, I suppose, which is related, is if you back a team, are you is it the kind of thing where you pick a vertical or focus and then back one team do it? Or like we're seeing with Easy Labs again, they've backed about 5 prediction markets protocols already. Is it more of a like spray and pray kind of thing, or do you pick one and that's your bet?
I think that will go to you, Tiffany.
Yeah, so I think, first of all, that depends on a lot of different VCs. Every different VCs, they have their point of view, whether they are going to back 2, 3, 4, or they just back the best, right? The best they pick. But for us, actually, we are quite independent. We're operating quite independently from the exchange side. So when it comes to investment, we mostly value them from a financial point of view. And as long as we think there is space for more projects in this sector, we are able to invest more.
Thanks.
So,
yeah.
So in short, as long as you can persuade us, like we're going to make money from this deal, then let's go.
Fair enough. Thank you.
By the way, Yamada, they are building DEX solution plus a lot of other DeFi things. So they're not only DEX is the one that they're building, but sure. Okay, next one, Shitesh from Kuber.
Hi everyone. So, I have like a couple of questions. The one is around, like every VC panel right now is here talking about how, equity is important. But at the same time, there are VCs who actually push to the founders to, pay tokens to them. And the tokens, because in the initial stage, when startup are like, initial stage, they ask for a higher amount of the token, and they also push for, go for that easy as soon as, possible, and then they dump the token within a, few months. So this is something I have recently come across when I'm, going for a raising of funds. I'm sorry to tell you that about my project. So we are building a layer one. It's a hybrid solution for institutional as well as the developers, and we are the one of the layer one who actually brought a privacy on chain. And with that, we are using a GKFHE, which is something that we have innovated in this space, and our consensus mechanism, which allow us to reach 1.2 million transactions per second. With that, we are also going to serve one of the Germany-based, the healthcare startup to secure their data and, and like train their AI models with our the private infrastructure. So yeah, coming on the questions, like, the VCs mostly push to the founders to go and sell their, go for like token sales, and then, after a few months, like maybe a 6 or maybe a year, the project got closed because of they have no options to raising a fund after that, because they have already given like a lot of tokens to their prior investors. So how do you see these kind of projects? Because recently I had a chat with Nitin Sharma from the Antler venture. So he also said like going forward with these kind of VC is not good. But yeah, I also want to see how other VCs like you guys are thinking on this kind of a project, or how do you see this kind of a VC's mindset?
Bit long question, but Sebastian, do you want to be?
Sure. Yeah, I think we've kind of touched a lot touched on a lot of ideas related to the question you're asking, right? I think there were VCs that did well by buying tokens at a some valuation, having those tokens go live on an exchange at a much higher valuation and selling those. But I think that meta is long dead. So I think if people are encouraging you to do that, like, just think about their incentives, right? If someone's pushing you, like I guess for an L1, like the token kind of is directly related to the project in the sense, like it's a gas fee or whatever else, so you might, or gas token, so you might need something like that. But like, if someone is asking, if an early stage investor is saying, hey, like I want to invest in this project very early, but what I'm most excited about is being able to liquidate my holdings in this investment, like. What does that tell you, right? Like, these people are obviously not aligned with trying to build a project over a long period of time. So I think they're telling you exactly what kind of investor they are. They might give you some money now, but they will be adding sell pressure to your asset afterwards. So it doesn't really seem like someone who's in it for the long haul. So yeah, I think it's pretty clear on that side of things, like, and that's what I mean, right? Like, I've seen this happen before with other founders too, where it's like, oh, these are the people who are like saying they're interested. It's like, yeah, well, they're interested in like trying to buy something low and sell it high in a very short period of time. Like, that's not really venture. That's not really even investing. That's speculation. And like, they're like, if you're trying to build something like a project that's going to be lasting like infrastructure, like an L1, like that's not helping, right? So even though it might seem like that's giving you a means to an end, it gets money in the door, and then you can build or whatever else, like, you're gonna be fighting at gravity while you're trying to build of people selling new tokens or whatever else. And I'm sorry, I know we're almost time, but I was just going to say this. Like, I used to work in institutional equity sales, so I travel around Canada and the US with people who ran businesses. Some of these businesses would be 100 years old plus, whatever else, right? And these are well-established firms, companies, and all that kind of stuff with staff and all that, whatever else. And these CEOs of these businesses would be confused about their share price and worried about how to manage this share price that's kind of floating around out there. And so if you think about that, in the context of trying to build something from scratch at zero, why would you try to make your life harder by trying to build something from zero to one or whatever else, while also trying to deal with market forces on top of your project? Don't do that. It's really a bad idea.
Yeah, I mean, I totally get it. Yep. And the second one, if there is no one has to add, so yeah, I'll go with the second questions. Right now there is a kind of people now VCs are more there are some VCs who are now focusing on the institutional adoptions. How exactly do you guys see the institutional adoptions? Because this is something where crypto market going to be safe in in a positive way. And yeah, I mean, I actually went to the IBW and I seen now VCs are more focused on the institutional adoption. So how exactly do you guys see the institutional adoption in this market?
I don't know how good mic guys, but I do think Akonau's got a pretty good lens on this. So I'll just say it really quickly. I came into crypto for institutional adoption. This is the whole reason why I'm here, and I'm super excited to see all the headlines and everything that's happening. It is freaking awesome. However, the institutions kind of move slow, right? Akonau's been trying to sell, this integrations with digital assets to financial institutions for 7 years now, and so now you're starting to see it happen. But even when an institution says yes, we're in, it takes a long time to get something done. So I just think, it's kind of a cliche, but this Web 2.5 era is going to be kind of long and drawn out because it takes a long time for a bank to try implement new technologies and at scale. I think it is happening, obviously, and it's very fascinating. But just expect it to take a long time, and it goes back to building businesses for the long haul over tokens. And to be honest with you, I don't know with respect to trading tokens, yes, financial institutions are all over that, but owning tokens is a different story.
Mm-hmm. Yeah, I mean, I'll talk to in a way where technology is more most focused in a way of the integrations. Because if you're talking about a 3 year back, at that point of the technology were not meant to be the institutional adoptions. But now, as I can see, because I'm also building for the institutionals, and the way we have innovated our solutions, I came from Web 2 background. I have given almost 4 years for a Web 2 companies, SaaS and B2B companies. So I understand the exact problem why they don't want to adopt the new technology or when we talk about the blockchain. So I guess the problem is not because of the compliances or maybe the crypto. It's about the current solutions we have, the current infrastructure we have. It's not meant to be for the institutions, because institutional always wants scalabilities and the privacy as well as the scalability, which was not supposed to be earlier. So don't you think this is something going to be more excited the way we are shaping up every single day new things coming up and shaping the institutional adoptions?
We have a quick reply to this one.
Yeah, but also I think one thing about institutional adoption is that if you're talking about public traded companies, they're always less willing to take on risks, and that's also why they're moving kind of slow, because they want to make sure there's less risk on the to be honest, risk on their stock performance. And also, just going back to the last question, I think when you're doing institutional adoptions on your blockchain or crypto solution, if you have a token, it's really important for you to draw that relation back to your token. Like if you're looking at like Aether, for example, I think is one of the better Web 2.5 setup. How they funnel the revenue got with fiat to their value in the token. So I think you might want to spend some time just figuring out how to connect that value back to your token so that your token still means something other than just credit on chain.
Okay. Let's come to the last question from the founder before we have the final one to conclude today's panel discussion. Ahmed?
Yeah, sure. I'll make it short. No worries. Yeah, this is Ahmed from Legend of Hearts. We are a family-friendly game, completely anti-violence, anti-nudity, and anti-gambling. It's been built from ground up to fit the kids genre. And we are introducing as well content tracking technology for sending gifts through social media. And my question actually is for Tiffany. Tiffany, I met Jason in GM Vietnam in the Seoul, when I met him there. And he was very interested in the game, and we discussed everything, and we created the group on Telegram and all of that. And they sent me a form to fill out. And actually the form was contradicting whatever we discussed in terms of, I like what you guys have mentioned right now, Clement and Sebastian and you guys, about that tokens are not that necessary anymore in evaluation and equity is more important, but all of the forms in more than 10 VCs that I have encountered with, all of them, I'm not even saying one or two, all of them are concentrating on tokens, and if you are not issuing a token, they're not going to even talk to you. I even was in one of the meetings, I was trying to explain our business model that you can even make money of the project even before we issue the token, because we're going to be having an IP holding company on top, and we're going to have different revenue streams, even without issuing the token. However, they are not even interested to hear about that. It's only about when is the token, when is the TGE, if you don't have it, it's not. So I just wanted to know, I like what you guys said, it's amazing. You four are amazing, but what about all of the other VCs that they only concentrate about the token when the token launch, anyway, right? The most important thing for them is the token. Yeah, thank you.
First of all, I'd like to clarify, I don't know who Jason is. I don't know who you met. We only have 7 people on our team. So I don't know.
Just from GitLab, I believe. So I think he's from listing team, I believe. Jason, you're talking to Jason Jiu, right? Ahmed, I believe.
Yeah. He was installed now.
He's from GitLab, from listing team.
He's from GitLab,
yeah. So I'm not fully aware of what they're doing, but as Gate Ventures, we are operating pretty independently, and we have our own funds for investment, and we are responsible for the financial return for this fund. And it is not related to Gate Labs, I believe. So you might want to check with them on their requirements. Unfortunately, I've never met Jason before. I don't know who he is. So you might want to go back and check with them on that.
Yeah, sure. Thank you very much. I just was wondering if Sebastian and Clement can give me more insight about token versus equity, how we're gonna be pitching our project to ventures that all of their concentration is about token and not equity.
Yeah, I think the very important fundamental understanding is that, Web3 VCs, especially ones that started from 2021, 22, the reason why they started the Web3 VCs is because the liquidity on the token is just amazing, right? Compared to Web2 VCs, it typically takes 10 years, 12 years to even get to IPOs. With token, just with the exchange listing, we can have such a fast exit on the investments. So that's why a lot of them are focusing on the token. But what is the difficulty right now is that, first of all, the lockup and the vesting is just very, very tough for the VCs to make money. And second of all, the secondary market is just not performing that well, even though we all want to. So that's why the sentiment is different. But also, I would like to clarify a little bit. When we stress about equity, we're not talking about we have to asset through equity. It's just that, first of all, to be honest, to put it really, really simply, if I want to sue you, I can sue you if I have equity on your company, even though we don't want to, right? But that's just a protection on our side that we would want to have. And also, for a more Web 2.5 kind of play, what we want to see is, are you familiar? Are you understanding where the value is going to be? Is it going to be accrued through the equity or through the token? So for example, like Open Eden, I'm not saying their token is not worth it. Of course, they're our portfolio. We really like their product. We're confident that they're going to succeed on the token and both the equity side as well. Back in the days, we decided to do the equity side investment because we see a lot of their revenue and customers are coming from the institutional side, which are probably like to pay more in fiat. They're going to generate a lot of value in the equity side as well. So we decided to do the equity. So that's kind of like different definition for HVC as well. So the VCs that we're talking to, they're asking for token. They probably are seeing more value going to be accrued through the token. And of course, the liquidity timeline is much better on the token side as well.
Yeah, thank you. Thank you very much for that. Thank you, Tiffany.
I would like to add on to this is that I'm not saying like raising with token is bad, but you need to understand like token is your product, not your equity, right? So if you are raising from using token, you need to explain how your token utility is being used and how it's going to be needed. We need to explain where the demands come from, right? And also regarding previous question about like VCs pushing founders to issue tokens and then buy low, sell high. Well, I think it's a transaction between a project and a VC, right? So when you are at the very beginning of your venture journey, you're looking for funds, then this VC comes in and provide the funds and probably the support. So that's a trade-off, right? You're giving this VC like 2% of the token, 5% of the token in exchange for their help on the service side. So that's also why vesting terms are very important, and that's also why a lot of listing teams nowadays they look into vesting terms. They want to make sure the vesting term is long enough so that you don't subject to a high sell pressure. So when you're designing your tokenomics, you need to have an anticipation of how much user I need to achieve by the time how many percent of tokens are being unlocked. So it's not necessarily that you're being dumped. It's about your value is not there's a gap between your actual value and the value you're providing. So so I think it's better to view it this way so that the token market, the whole liquidity market, comes back to a more rationally viewed market.
Yeah, maybe I'll close out on that and just like say it's like, I know I've been kind of like dumping up on tokens as well. It's like I do see how like they could play into a product design and there is some value there. Sure. However, I just think like most companies go public with their equity at a much later stage than like the earliest days of building. They would seemingly have some product market fit or whatever else before they start to worry about the value of their business oscillating at the same time, like as their fundamentals are, while they're trying to build and find product market fit. And I think like having an early token out there while you're trying to do that is that's just a recipe for disaster. It's gonna be so hard to try to you're gonna be managing an upset community. Your staff's probably upset because they got paid in this token and it's going down only, and so on and so forth. So I just think it's a very powerful alignment mechanism, and it can play into a very rich product experience. Full stop. But I just think it's something that should be managed and be very thoughtful with respect to when it gets rolled out to the public and under what terms, as Tiffany mentioned, with respect to lockups and vesting and all that kind of stuff as well, right? It's I think too many people try to play the short term token game, and I think that's a mistake. But I do think that on a longer term basis, it can, as I said, play into a richer product and community alignment for sure. But I think there's differences between tokens and equity. We often will token exposure through a warrant or whatever else if it makes sense. But to me, frankly, it's just a red flag if I'm talking to someone day one and they're talking about TG and token or whatever else before they have a product market fit. It's these guys are in it for the wrong reasons. So I think that's the distinction to be made as opposed to token bath here.
Cool. Thank you very much for all questions from the father. I think this is time for closing right now. So there will be one last question I would like to ask Clement, Tiffany, and also Sebastian in general, for the father here. So for the father who is raising fund right now, what is your best advice for them at the moment?
Yeah, maybe I can start with that. Just a side note here, I think having a good relationship with the associates and analysts is pretty good because they're the one that's going to fight for your deal. As rather, I see a lot of founders when they talk to us, they're just like, "Where's your partners? Where's your boss?" Right? But you have to understand the investment team is the one they're going to fight for your deal. So just maintain a good relationship. Try to make their job easier. Providing more easier to understand, get around something like that. But other than that, I also talk about this in our pitching session as well. One of the things that I see that founders do is to research into the VCs they're pitching to. Of course, the first and easiest thing is to understand the scope of their investments, what stage, what valuation range, and tackle what regional focus as well. So this would definitely increase your efficiency talking to them. For example, if you know the VC is known for caring more about the tech, you can spend more time talking about the tech stack. If the VC cares more about the business side, you can spend more time on traction and matrix or plans. And if you're doing pretty good on the fundraise side, to a point that you can choose what investors you want to take on. Spend some time researching the right investor mix for your business and have a cap table that might help with your future fundraise as well. And another thing that I also talked about in the pitching session as well is that if you can, design some little traps in your pitch to lead the investors into the questions that you have prepared very well. We all know that there's going to be questions on call. Actually, the more questions, the better, because that's what you want. So make sure that you understand where the questions will be coming from. Have the numbers ready to go, if possible, as well.
Cool. Tiffany or Sebastian?
Sure. I think the thing I would focus on the most is what problem are you solving with your technology, and why are people going to want to pay for that solution? I think pretty simply, if you have that, then I think you have a business, and I think that makes sense. I think a lot of times we have in crypto, you get a lot of like kind of copy paste projects or things where it's like, oh, it's an incremental improvement on something or whatever else, and possibly, some of those things can work out. But generally speaking, I think if it's like, hey, there's this friction that people experience. Maybe you as a crypto user, you as as a person operating in the financial ecosystem or social, whatever it might be. And like, this is going to fix this problem, and I or my team are the ones to fix it because of our backgrounds and our unique insights. Like, I think if you have that at the pre-seed level, then I think people will be interested. As you start to move on, you have to show people want to use this thing. And it's like that. You've got real users that are willing to use and ideally pay for the solution that you're offering. And I think like beyond token and any of all this other kind of stuff, whatever else that tends to dominate the narrative, I think it's like have those things figured out. And to Clement's point earlier, like explain it properly, lay it out for people, tell a story, and like the money will come to you. And it's not going to be asking, what's the soonest time I can sell my investment in you. It's going to be like, I want to own this thing because it's going to be, provide venture scale returns or be like $1 billion company or whatever else in my portfolio. And I think if with that lens, your money will come.
Yeah.
Yeah,
so I both Clement and Sebastian mentioned really important stuff. So I like just a little bit of add-on is that make sure you have a blurb that clearly explains what you're doing and some of your attractions, because when we see a lot of DocSend, it's very hard to relay this DocSend links to a certain project. It's very important to have a blurb. Yeah. That's it for me. I think this is the most important thing.
Cool. I think a lot of the call. Okay, thank you, Clement, Tiffany, and Sebastian for all the time you spent pending as well. So thank you for joining the call. So the contact of Clement, Tiffany, Sebastian, and even Leroy will be in the causeway. So they got the Twitter, so I got email, LinkedIn, and Telegram. So if you get further question submit it from the panelists, feel free to reach out to them directly. And also to the panelists, I think this is the last time we got time to talk to you. Face before for me, and Chris. Happy early New Year. I think Clement as a we are going to the post-Vietnam Christmas. I'm not sure. Again, guys, thank you a lot for the call and for the founder. I see you on Thursday. We got another panel discussion with different people from different ecosystem. We got people from Bella Chain, from Say, from Neura. Who's last one? I've got 4 people in the code and on Thursday, and that also will be the last section in the week 6 before we go to week 7, where we announce who going to move to phase 2. So again, bye-bye everyone. Have a nice night or new days. Talk to you soon. Bye-bye.
Thanks everyone.
Thank you very much. Bye-bye.
Bye-bye. Take care. Yeah. See you guys.
See you.